Hello, and thank you for joining us today for the McCombs School of Business Career Webinar with Harry Yoshida. Prior to Rocket Dollar, Yoshida was the co-founder of Honest Dollar, a robo-advisor retirement platform that was acquired by Goldman Sachs, as well as the founder of My Group LLC. He is a next-gen venture and Central Texas Angel Network partner, as well as Techstars and Capital Factory mentor. In addition, Yoshida is a certified financial planner and a former Merrill Lynch vice president. He was a two-time finalist for Plan Sponsors Retirement Plan Advisor of the Year and a 401k leadership finalist for the American Society of Pension Professionals and Actuaries. Yoshida graduated from the University of Texas at Austin and holds an MBA from both the Johnson School of Management at Cornell University and Queen's University in Canada. He resides in Austin with his wife and two daughters. A few points of business to note. Should you lose sound at any point during the presentation, closing and restarting your browser should address the issue. If you hear an echo, check to make sure you have only one instance of your webinar browser open. If you'd like to rewatch this presentation, a recording of the webinar will be made available early next week. Henry will be taking questions throughout the webinar, so feel free to type those in the chat box on the left-hand side of your screen. We'll also be taking questions at the end. That will turn the microphone over to Henry.
Thank you very much, Dan. I appreciate it. Thank you very much for the opportunity. It's really exciting to be able to present to a group of people that I'm connected to through the University of Texas. Even prior to UT, I'm a native-born Texan. Oddly enough, I'm the first person traceable in my entire family's history born outside of Japan. And of all places in the world, it was the country of Texas. So I came to UT from Dallas, where I grew up. So hopefully there's a lot of native Texans here on the webinar with us today. I wanted to talk to you guys about my newest company, Rocket Dollar. It's really a culmination of a lot of the things I've seen in my professional career, just basically almost from the day after I left the campus here at the University of Texas in the year 2000. I had started at Merrill Lynch as a financial advisor. I ended up having a background that didn't take me down the path of investment banking to a money center such as New York or Boston or Chicago, but instead I was able to stay with Merrill Lynch here in Austin, Texas, and work as a financial advisor. I started gathering client assets, and then basically right when I was starting, the internet bubble was bursting, which had a pretty substantial effect here in the economy locally. We were a very tech-focused and tech-heavy city at that time, mostly in semiconductors, and it changed the direction of what I'd worked on. So very early on in my career, I transitioned to working with IRAs and 401k plans for small businesses. And over the last 15, 16, 17 years, I've seen a multitude of laws coming into place that essentially auto-invested a lot of individual workers' monies into retirement and 401k plans. So most IRAs in America kind of go by way of 401k, which gets transferred to an IRA. These are pretty ubiquitous terms for those of you in the working world, in the professional and corporate world. So our tagline at Rocket Dollar is that we help people basically make investments beyond stocks, bonds, and mutual funds on a digital platform for the forgotten trillions and help them achieve 21st century diversification. So let me kind of talk about what 21st century diversification means. When I started my career, we actually had pamphlets, literal pamphlets that were sitting on our desk, and we were expected to present these to individual investors that talked about a set of mutual funds or one mutual fund even that might just have an allocation of 60% to stocks and 40% to bonds. And that might have sufficed back then. At the time when I'd started my career, alternative investments might have meant a mutual fund that invested in stocks for a foreign country, so even Canada or the UK even counted at that time. But what we've seen since then, of course, is sort of a new era in the 21st century, which is the explosion of private assets. So as I speak to you guys today in March of the year 2019, a company that you guys probably use right now, generating hundreds of millions in revenue, but also hundreds of millions in losses, is doing their IPO roadshow. It's called Lyft. So ride-sharing company. They weren't even the first ride-sharing company, because Uber is essentially going to follow in the next few months right after that. And I bring up this particular instance because back then you were able to do a 60% publicly registered stock and 40% bond portfolio, and that stock component had an expectation that it might be representative of both micro cap, mid cap, small cap, large cap, both value and growth, and maybe even some international stocks inside of it as well. Well, the way the world has changed from an investment standpoint, those days of the 60/40 stock bond portfolios don't allow, in my opinion, as someone who's worked with investments for almost 20 years now, to truly achieve a diversified portfolio and get into basically the value creation opportunities of the future. So I brought up Lyft doing hundreds of millions in revenue. As an aside, the companies today are IPOing much, much later. So for you to just rely on publicly registered securities in the stocks and bond markets basically forces a lot of individual investors to potentially miss opportunities that they otherwise could have invested in only 10, 15, and 20 years ago. Lyft, of course, hundreds of millions in revenue. For those of you on the webinar today that may recall, probably at some point now you have Amazon stock inside of your portfolio. I started my career actually positioning Amazon stock into client portfolios in the year 2000 when I started my career. Amazon had already been public for a couple of years, but in 1996 they did 511,000 in revenue and had about 306,000 in losses, and then IPO'd the following year in 1997. So for individuals today, those future Amazons who kind of go on to be these sort of household dominant, I guess, in almost any industry that they decide to go into, they're pretty much a number 1, 2, or 3 player, basically essentially functioning as the General Electric of the modern era, that there's no opportunity for most investors to acquire a public share of that stock because they're not going public anymore. So one of the ways that we sort of portray Rocket Dollar and what we've done in the direction of our company and where my career has taken me is to sort of present an option to say, hey, maybe we could take the monies that we've accumulated, because the days of limited options are behind us, because right now we're woefully restricted to just public securities in our IRAs. And there's been an explosion of alternative platforms. So you don't need to be an individual who has some ability through a venture fund friend of theirs to access a Lyft in the early days of that company. At the end of the day, you probably have to sift through thousands and thousands of technology companies to really identify what might be the big winners that are IPO roadshowing today in 2019. And there'll be a handful of those over the next few months. But there's been a massive explosion of alternative platforms that allow you to invest in everything from private real estate to very small pieces of commercial office real estate, buildings, to startups, directly to cash flowing businesses where you might be able to provide a loan and get paid back as a percentage of the revenue off of those loans as well. So just a myriad of anything you can imagine might be available today. And that could stretch anywhere from digital currencies that you've probably heard about, to real estate, to direct investments into businesses. And then this is all laid against the backdrop of financial regulators are actually trying to make it easy, recognizing that maybe the bulk of supply of investable alternatives actually exists in the private space versus the public space, which has been a market flip probably from the early 2000s to today. And at Rocket Dollar, we're just trying to facilitate that. So we're basically talking to folks and saying, where's the money today? So most of us that I mentioned have the IRA and the 401k accounts. They're kind of stuck. There's no real easy way to diversify those investments beyond the public securities that might make up a traditional 64 portfolio that we talked about in the last slide, to diversify into private investments, whether that's through one of the 150 platforms we talked about, or whether it's even into a direct rental turnkey real estate single family home investment on the other side of town from where you guys may be living, from wherever you're chiming in for this webinar too. So top line numbers today are pretty massively large. So right now there's roughly $10 trillion inside of IRA accounts, but only about $100 billion of that money is actually invested in anything outside of publicly registered stocks, bonds, index, or mutual funds. So, our tagline at Rocket Dollar is that those investments or those monies are essentially stuck. And right now they might, because they're stuck in the public registered securities, you might not have the opportunity to invest in what today is the majority of supply from available investments. So our goal at Rocket Dollar is to change that. And these numbers are not only made up of just high top level numbers, but there's actually quite a few people in America today that make up a very large, have pretty large and substantial portfolios that could probably benefit from taking 10 or 15 or 20% or more of these investments and venturing outside of the public registered securities. So endowment funds, private equity managers, municipal pension plans for cities and states, and all over the country are essentially have always been very, very heavy in alternative investments. And that can range anywhere from 5% to maybe even 50% or more of their portfolio. So the, I guess, quote unquote, institutional money has always had access and a proclivity to ballasting a portfolio with both private and alternative investments against the backdrop of publicly registered securities. So we kind of point to the bar chart, my team and I, and say that you know, there's quite a few people. There's an 8% population that have monies between 75,000 to 100,000, and there's actually 25% or more in Americans who have 200,000 or more in retirement savings. I've spent most of my career kind of seeing and sort of consuming a lot of sort of studies that have come about that there are millions of Americans that don't have enough savings for retirement. And while that is true, those that do have the savings actually have pretty significant savings. And as we talked about in the last slide, those savings are largely restricted to public securities, at which point today in 2019, that might only represent 25 to 30% of the available market. So when we take a combination of what we've created here at Rocket Dollar, a digital platform to help people unlock those monies, 99.5% of which is actually restricted to investments in public securities, largely held by only 10 companies. Our goal is to help people unlock those easily. And let me kind of show some examples of some client use cases. So I use different names, but these are actual client use cases that we currently have right now in our portfolio. And then the last one there with the outsized investment account is an anecdote of how I personally found out about these accounts in the 2005, 6, and 7 timeframe. So some of you folks may recognize him. He unfortunately, he didn't go to the University of Texas. He went to the University of Illinois and ended up in Silicon Valley and was one of the co-founders of a company called PayPal with a gentleman named Peter Thiel. And then shortly thereafter, they were joined by Elon Musk, who's now the founder of Tesla and Solar City and SpaceX. So I use the example of just 3 individuals. And I say millions of people today that represent that $100 billion are already using their tax-advantaged retirement accounts to invest in alternative assets, so things that aren't public stocks, bonds, mutual funds. So a freelance engineer consulting client, Seth, basically, he invested $23,000 in both digital currencies and a combination of a business equity investment. So in this case, an angel investment into a technology startup. Tanya, the middle person, actually grew up in Texas, now lives in the East Coast, purchased a rental property, but took advantage of the tax protections inside of an IRA to purchase that property. So rental property investments, as you know, purchase property, you put it up for lease, you get a tenant, you start getting a monthly rent check, which in all cases is going to generate just ordinary income to you. And she decided to accumulate that, defer the taxes similar to an IRA format, and essentially have that accumulate and grow as a cash balance to facilitate hopefully her buying some more properties down the road to balance against a 401k at her current employer. She's a management consultant in New York, grew up in Texas, with that of course only has investments in publicly registered mutual funds, so a target date fund, if you're familiar with that term. And then in Max's case, he was their co-founder of PayPal, the group that had started that company. It's an interesting history, but he invested in one of his early employees' new business post PayPal. Had a pretty funny name. It became a company called Yelp, which ended up doing an IPO itself in the 2008 timeframe. And his investment using retirement dollars actually yielded some pretty significant returns, as you'll see. So if these people had made these investments in a normal capacity, so let's just say with a regular cash bank account or with a regular brokerage account that decided to transition from mutual funds and public stocks and Google and Amazon to investing in the business equity investment, the digital currency. In Tanya's case, it would be rental property. And in Max's case, it might be investing in a very talented engineering friend's business, which became Yelp. The amount of losses from a tax standpoint based on their IRRs over the 3 and 10 and 7-year periods would have been pretty massive. So these are just kind of high level estimates as examples. But luckily, these folks actually, 2 of the people didn't know any better before coming to us, so they already had these investments. But again, I mentioned earlier that Mr. Max is one of the reasons, very publicly through the Wall Street Journal, is how I knew about these accounts, even while working in a very traditional investment capacity as a certified financial planner, managing pretty standard and traditional portfolios for folks. The first time I found out about these accounts, and only a couple of years later, instead of it being Silicon Valley entrepreneurs who all started a company called PayPal doing these types of strategies, find out that politicians and private equity and folks on the East Coast were actually doing this as well. So one of the more famous examples that some of you on the phone or on the webinar may know about is that the general public that does know about these accounts, maybe 2 to 3.5 million people who use them today in America, found out about them originally from when there was a Republican candidate against Barack Obama in their second term, and in just the general public disclosures of where you might have invested your money or where your accounts were held, it was sort of revealed, and it was completely sort of legitimate at the time, and it still is, that Mitt Romney had some 9-figure IRAs. So 9 figures, if you count that out, is $100 million or more in an IRA account. And it turned out that he was making private and alternative investments 15 and 20 years earlier into some early private deals that Bain Capital had sponsored. And of course, the outsized returns compounded with the tax advantages of an IRA ended up becoming a 9-figure account. So it's pretty phenomenal. Again, Wall Street Journal, so I guess their investigative journalism side had this sort of mild 4-year obsession from 2006 in Silicon Valley to Boston, Massachusetts, in the political realm of talking about these sort of outsized IRAs. And for us, the overview of the solution we offer, I've kind of talked about the landscape of where the investment world is today, how I saw it sort of growing up and through my career, and how I guess Dan had done a great job of sort of maybe explaining some of the things that I've been able to accomplish in my career as a retirement plan advisor, just to traditional corporate plans, and then after the fact to individuals in their very traditional IRAs. So myself personally, I've probably been personally responsible now for putting upwards of maybe $4 billion into mutual funds, just across various mediums, whether it's corporate retirement plans or through individual accounts and IRAs. And it just led to the genesis of creating Rocket Dollar, which was the ability for folks to tap into those funds, unlock them. Again, we mentioned high level, 9.2 trillion in IRAs, held by almost 50 million households today, over 99% invested in publicly registered securities, which may be a very fine and appropriate investment for everyone. Our thesis at Rocket Dollar is that, but for those that might be in that 25% with 200,000 or more, could make sense to diversify some small portion of that, whether that's 5, 10, 15, and maybe that's dependent on your conversations with your own advisor and or your own personal preferences and your access to deal flow to diversify away and utilize those investments for private opportunities. And if the inclination or the objective decision is to achieve 21st century diversification, we've written several blog posts at Rocket Dollar as well that talk about not only what you invest in as a contributor or a detractor from your overall long-term investment returns, but also the placement and the tax treatment of those investments. So one of the themes we have here today at Rocket Dollar are that you can keep the tax benefits, but you can invest in some of these sort of very high alpha, high potential, long-term, maybe in some cases, illiquid investments, but take advantage of the tax deferral of an IRA. So dollar for dollar, investment to investment, apples to apples comparison, an investment that could be made with tax qualified dollars from an IRA will yield better investment returns than an investment where taxes will be due on an ongoing basis, especially as in Tanya's case, that might be rental property generating traditional ordinary income. And for us, it's a new concept. And what we seek to do at Rocket Dollar is to create an integrated solution, an online platform that is not designed to look any different from a traditional financial services company and offer up an investment account. So for us, people go online, and let me go to the next slide. Oh, sorry about that. So let me go online. So what we do is we allow people to essentially sign up online, no different than they might from their old Schwab portfolios. Then from there, they can actually transfer or contribute funds from any myriad of existing financial services companies, very similar to how you might be moving from an old corporate 401k plan and consolidating to your IRA at an online brokerage provider, let's say, for example, a Vanguard or Fidelity. And then from there, you make investments of your choosing in the alternative space. Except for us, when you're doing private investments, you aren't buying a share of a mutual fund or buying a share of a stock. You actually need to go in and sign a subscription document in a lot of cases. So we let our investors and our customers operate a bank account that just has the tax treatment of an IRA. So those are kind of the three turns. I wanted to go back one slide and show you that expand a little bit more on Tanya's situation, because again, these are based on our own homegrown. So Tanya did go to the University of Texas, and again, change the name, not using last names here. But so she grew up, she was a native Texan like myself, grew up in San Antonio, ended up coming to the University of Texas, graduating with a degree, getting a management consulting job in New York City, spending her first 6 years of her career there, accumulating and investing into a 401k like is very sort of typical of someone with a high-paying job coming from a great university degree, and accumulating an asset base inside. And then realizing timing-wise, similar to mine, where I started my career in the internet bubble bursting, and then right as I was getting into a groove as a financial advisor managing portfolios for individuals, the credit crisis kind of came right after that, about 7.5 years right after the internet bubble bursting for me, and also took a big hit to traditional portfolios. At that point, people like Tanya and myself probably started realizing that having a lot of eggs in that only public security basket wasn't the best way to go. And in her case, she'd accumulated enough of a balance in the 401k and found out that she could go back and make future purchases into something tangible. So in her case, it was rental property. And there was a component to being able to take advantage of her knowledge growing up in the San Antonio area and recognizing that city has actually been outpacing the growth in some measurable forms, ahead of Dallas, ahead of Houston, ahead of Austin, Texas, where we live today, with a lot of corporate employers coming in and saying, hey, I could take advantage of unlocking some of my old 401k funds from my past job, opening an account at Rocket Dollar, say no to taxes, and essentially invest in a property that will generate great returns for her as she works throughout the rest of her career and access those funds. But at the same time, this picture is overlaid against a family that at the same time she could take advantage of her knowledge, use her funds from an old 401k, but then also feel good because now she's able to purchase a property back in her old hometown of San Antonio, which would let Ruben and his family become tenants and live in the community there in San Antonio and take a job with some of the new corporate employers that are moving in. So that's one of the powerful sort of personal anecdotes that we've seen of individuals using our accounts at Rocket Dollar. And to date now, we have customers that have come into us from many, many states, and we've been capturing a lot of these stories. And we'll probably start our own sort of webinar and podcast series to highlight some of the, I guess, human elements of the investment possibilities within these accounts, highlight some of the companies that people invested in, or some of the just the personal stories and the impact, and using some of this information in Tanya's case, knowing the San Antonio area and the growth that she's seen as a native Texan. So for us, I mentioned earlier that people go online. There may be a little bit of lag on the webinar, but we've structured the account to not look markedly different from how you open an investment account today. So of course, as the vast majority of people on this webinar are McCombs alumni, that if you've ever opened an investment account, you basically go online. You give information. The information in our case will help guide you to the appropriate account type, and we offer individual retirement accounts. We have two primary flavors of those and then variations of those sorts, but the way you give us the information will automatically determine what account would be appropriate for you, whether that's a Roth, whether that's a traditional, whether that's a SEP, whether that's a one-person 401k, and so forth. And then I mentioned from there, we built a digital transfer kit form. So wherever your money might be coming from, you can input that information. We'll go ahead and pre-fill sort of the contact information that you would need to move over your account from an existing financial services provider, whether that's a full or a partial transfer. Again, I've mentioned earlier that you may be more comfortable, or people probably might be better served as a Rocket Dollar customer using a small portion of their overall investment asset base in retirement, take advantage, unlock those funds, bring over a small portion to us, pay no taxes, and then get into a private deal such as Tanya, which might be a rental property that you can own throughout the course of your working career as an investment to sit alongside your mutual funds that you would have in your current retirement plan at your employer. And then from there, as I mentioned, people essentially can make the investments alternatives of their choice. So pretty simple process for us, and we're not trying to change what I think people that have been investors, already used to doing right now. And I know this crowd, we've given this presentation in a live format in the first Friday session. So you get kind of direct feedback, and it seems like in this audience, there's a very sort of experienced investor group. And we're not trying to change the way that you make those investments. We're just trying to give you the opportunity to do investments that you otherwise might not have thought you could do with this account structure. And then for us to date, as a homegrown sort of Texas boy myself and then a UT grad, this is a new business for me. It's a digital platform. We are in the very early stages. We're a venture-backed company, but we've gotten off to an interesting start. And I wanted to stay on this slide for a second to just indicate that for us, we had a couple things that were important to us. As I mentioned before, there are 2.5 million accounts representing about $100 billion that's currently doing unlocking funds, paying no taxes, and making alternative and private investments. But they recognized that they were in the minority, and I think that they didn't value the customer experience side. So for us, we decided at Rocket Dollar very early on to try to make our interface intuitive, our customer support very sort of knowledge centric. So most people self-service and answer questions themselves. And as you can see, some of our competitors, they think about it the opposite way, which is that, hey, I want to acquire the customer and then I don't want to make the experience so great. And I think that's a bad way to sort of do business. So that might be more on a different type of career webinar about how to structure a business today in the 21st century when feedback from customers can be almost instantaneous and very public at the same time. And the other thing that was kind of pleasantly surprising for us was that we're tapping into a pool of people in America that might have felt and had the same feelings that we had, which is that there's a pent-up demand to maybe unlock and diversify some portion of your investment assets. Because on the bottom left, we did not predict that we would have customers that came to us from almost 40 states in a lot of different areas. So they weren't coming from major metropolitan areas like San Antonio or Austin, Texas, or Los Angeles, California, or New York City. But instead, people were coming to us online digitally from a variety of different cities and places that might be more than 100 miles away from a major university or a major metropolitan urban center. So kind of led me to believe two things, is that Americans have a lot of accumulated assets inside of their accounts, and there's a lot of pent-up demand to maybe go into a Tanya type investment where for once you kind of have the information advantage and you could take advantage of really knowing what area of a particular city might be poised for growth over the next 5, 10, 15, and in her case, probably 30, 35-year time horizon in an account that otherwise wouldn't be able to be accessed until you're 59 and a half. So it's been kind of an interesting sort of road for us. And as we continue to grow, we focus on 3 channels at Rocket Dollar, one of which is doing presentations and talking and trying to get connected to folks like you through webinars and go direct to the consumer. That's been a big sort of source of flow for customers to us today, and also allows us to have a direct interaction. So we welcome people coming in and having conversations with our services, our sales folks, and ask about what types of investments it might be appropriate for them, and see if we can help facilitate the creation of the account. We don't make recommendations for investments, but we have a lot of use cases now of where various people might go when it's not just sort of handed to them as a cookie cutter mutual fund or a stock on an online digital brokerage platform. And then we work very closely with financial advisors and real estate pros and tax advisors, and even people that might be themselves raising small private funds. That's been another channel for us. And then the one that we're most excited about that I think for long-term growth, I've mentioned in slide 2, right at the beginning of the presentation, that there's been a growth of just in the last few years, 150 plus digital platforms that you can find on the internet that are all regulated, and they present opportunities to invest in maybe 1/100,000th of a piece of a commercial office property in Manhattan. And then you can go to another site and start to browse turnkey single family rental properties that you could either buy a $5,000 unit in, or you can buy an entire house, and you can search those by price range or by zip code. And they're pre-vetted, they're already pre-leased with a tenant inside, and you can basically purchase the rights to own that property on a digital platform. Then there's a whole host of digital currencies, in addition to being able to go into vetted early stage companies, whether that's as a crowd lending platform or even a crowdfunding platform. And what's exciting for us in trying to unlock this $10 trillion pool of money, which is relatively dominated by to the tune of 99.5%, with public companies held by, with public investments held by only 10 companies largely, is we built an API button. So for those on the phone here, we kind of liken it to, instead of a PayPal button on an e-commerce site like Amazon or Wayfair or House, where you might be buying furniture, or just general household goods, and at the end of it, you have a credit card intake form and or a pay with PayPal or pay with Amazon or pay with Apple Pay button. On the digital investment platform, our API functions as a Rocket Dollar funding button. So for those of you that have a Rocket Dollar account with available cash inside, you'd be able to make an investment on these online digital platforms by tapping the button and then facilitating that investment directly. So pretty exciting development for us in 2019. So maybe if we get a chance to get asked to come back or present again to the broader university group, we'll have more of that in different places and be able to talk about the development and sort of the growth. And I think the key there is that it allows someone to go from one type of digital investment platform to another and basically ballast their portfolio of traditional investments by being able to potentially go directly into real estate of their flavor. That might be storage units, student housing, single family property, or commercial real estate in a money center like Manhattan, along with being able to hit the API and invest in a couple of businesses that might be related to your own personal career area of expertise. So you feel like you have a knowledge advantage in being able to help that company, or you just want to be a stakeholder because you know it's an up and coming industry. And for us, not all of my team went to the University of Texas, but I like to say that we have about 20-25% representation. We are all based here in Austin, so in one way, shape, or form, we're very, very tied to the university. So I'm the person with the big smile on his face in the upper left, Henry. Again, native Texan, born here, very proud University of Texas alumni, and just had wonderful experiences being able to come to the university. And I don't even think that I left the state except until my junior year, which was just one sort of study abroad session that I did. And it was the first time I'd left the state and the country at the same time, and all facilitated just on a grant from the University of Texas back in 1999 for me. Up until then, I'd spent the first 20 years of almost 20 years of my life completely in solitude living in Texas. So for us, this is the last slide of the presentation, and we're available to take questions, comments, and just kind of answer about either myself, my team, the product, and maybe even just where we might see the investment world going in the future. I think that that's changed quite a bit, and you have these generations that have very different exposures and experiences when it comes to just investments in general. Part of that is because technology has been growing at a fast pace. There's been a lot of upstart companies coming in to offer turnkey digital asset management available in a mobile app, which was the thesis of my last business. But then that's also overlaid against essentially having two recessions in the public stock markets in the last 17 years, along with companies now accessing private capital in the form of venture or private equity and holding off an IPO that might have otherwise happened much earlier in the company's life. So for those of you that might have some of these old accounts, we're happy to offer a coupon code specific to McCombs 2019 alumni. Our pricing is pretty simple. So instead of us having an expense ratio or a commission charge for each and every transaction you might make on a brokerage platform, or a fee that's assessed against the returns of a mutual fund, the only way we make money from you is pretty cut and dry and upfront. It's $360 as a sign up, and of course the coupon code will access $100 off of that. And then we charge a monthly maintenance fee for compliance purposes of $15 a month. So the way we like to talk about it is, if the average mutual fund today in the large cap space is 1.21% of your account value, at $20,000 account size and larger with us, we're essentially functioning at about a 0.9% ratio on that. But regardless of whether you bring $20,000 or $200,000 over to us to invest in things that you have access to, or things that might allow you to diversify in a 21st century way, the price stays the same regardless of account size or regardless of the number of transactions you make. So with that, I'll kind of leave this slide up here so people can maybe write that down, and maybe myself, and I have one of my colleagues, Dan Krzyzanowski, an EVP, with me to just answer questions that may come in.
So everyone can enter questions in the chat box on the left-hand side. While we're waiting for those questions to come in, I wanted to thank Henry for talking with us today. We're really happy to have him. It's a new topic that I hadn't heard about, so I think I'm going to have to go back to the recording and kind of listen to it again to dig deeper.
People have been doing this for decades, but it's been a limited group of individuals for sure. And our goal is to, I think technology, the whole basis of technology, the way I view it, is that it allows access to, in a much broader way, whether that's cheap, whether that's, just access online. And this is a product that's been pretty restricted. It's been available since the late 1970s, but has not been highly utilized, except I would say at the very sort of upper echelons, people, as we've alluded to, that had $100 million accounts. And there may be a couple here on the webinar today, but I think the vast majority of us in America are just accumulating money inside of a 401k. And our goal is to help those people, if they so choose, to maybe take advantage of what is a pretty large part of the investment supply today in America in the private markets.
Do you think that because of what technology has allowed the access to, that more people will become aware of this than had? You said it's been around since the late 70s, but
Yeah.
do you think people weren't aware or didn't have easy access?
No, I think that it took a long time for alternative investments themselves to catch up. So, we chose to build the business around kind of more of a picks and shovels approach, so people can access the dollars that we knew existed to the tune of $10 trillion in IRAs. But we fully believe that we weren't the creators of these different platforms. I mean, these 150 platforms, some of them are pretty amazing. My team and I, we've taken advantage of them. It's part investment, it's part social impact, and it's part that, we have this knowledge advantage. But we've used some of these platforms to actually invest in maybe being a small part in crowdfunding a loan to a business owner in Austin, Texas. So maybe instead of relying on a $200,000 credit line at the local bank, where the interest rate might be creeping higher, they could now offer a $75,000 loan through the community at a lower interest rate. Because for me, I expect investment returns in my account, but it's also maybe a place that I might frequent once every 2 weeks, and that's where we get together. It's our neighborhood pizza shop, or in my case directly, I won't name names, but it's a local barbecue and microbrewery place that I probably eat there every 2 weeks. They offered a loan online, so in a way, it satisfied my need to invest some dollars and get a return. So this wasn't an equity stake; it was just it was an interest rate return. It was much higher than maybe a traditional bond fund, and it was kind of a nice opportunity to make an impact locally to a business too at the same time.
Well, we have recorded this webinar, for which we have one question coming in. We do have both Henry's and Dan's emails there on that last slide.
Yeah.
So definitely reach out to them if you have any questions that come up after this. So thank you again to Henry and Dan for participating or presenting today, and thank you all for participating. Our next webinar will be next Wednesday. It is a Knowledge to Go webinar with Cesar Acassi here from the McCombs School of Business. That'll be at noon. We hope you can join us then, and we will get a recording of this up on the website early next week. Thank you all. Have a great day.